Well, happy Diwali if you have just tuned in. And well, half the India celebrated Diwali yesterday. Half of us are celebrating today. Bit of a yes-no moment.
Bit of a overlap in the amidst timing.
Yes.
So it started at 6 p.m. yesterday. It ends at 4 p.m. today. So you had to do your Diwali Puja ideally yesterday.
If only it was a holiday both of the days, right?
All right, Sunil Singhania joins us, and Sunil is a man who believes in tradition. Right, Sunil bhai? Always follow the tradition?
Always.
So the Diwali tradition is do puja, come to ET Now, and share some money-making ideas.
Happy Diwali to you, everyone at ET Now, and to all the viewers. Very sure that India has been making money for all the brave hearts and the diehards, I would say, those who have been positive, and there is no reason to believe that this is going to change anytime soon.
What do you make of the recent bout of volatility? Everything was looking great, everything was gung-ho. But post 15 September, this market has encountered volatility, reversal in mid and small cap stocks, and now everyone is questioning that how long this bull market will continue. What are your thoughts? You think a year from now will be higher, lower? Where are we headed?
So there is absolutely no doubt that markets have been volatile, but Nikunj, when have markets not been volatile? I think ever since I have been in the market, and I'm very sure ever since you have been in the market, volatility is a part of the equity markets. We jokingly say that equity markets are like cardiogram. As long as it's up and down, we are all alive, right? And I think there is no reason to believe that this volatility is not going to continue. Yes, the intensity of the volatility differs depending on the events which we are seeing. And to that extent, I would say what we have seen over the last few weeks has been the result of some excesses which we saw before that. And actually, the markets are down like, what, 5-6%, and we are all talking as if, it's been the end of the world. Yes, there are some stocks which have fallen more, and the reason was absolutely what I mentioned earlier, that they were trending and trading much higher than their fair value. So there is no doubt in our minds that money will be made. It is completely dependent on what time frame are you talking about. So if you're talking about 1 week, 1 month, I don't know. But if you're talking about 2, 3, 4 Diwalis from now, I'm very sure that equity as an asset class will generate returns higher than any other asset class.
Okay. So my next question, Sunil, is about where do you think from this Diwali the big pocket of outperformance, big pocket of no return, and big pocket of underperformance? I will not assign time here, but let's say in next 2 to 3 years, where do you think there's potential to outperform, no returns, and underperform, which is negative returns?
Nikunj, I'm a traditional investor, and at least our view is, and it's been proven over centuries, equity markets globally have a 300-year history. In India, we have a 150-year history. Ultimately, we are investing in companies, and the returns are proportionate to the profits the underlying companies make. And I think to that extent, we have no doubt that the profits of the companies are going to grow going forward, because, if the economy is going to grow at 6-7%, the nominal growth rate will be 10-11% for the economy, and profits will grow maybe 12-14%. And to that extent, money will be made. And it has also been amply proven over the last 2, 3, 4 weeks where markets have corrected, that where earnings have been resilient and earnings have been good, those stocks have not fallen. So we are very clear that going forward, I think this is going to continue. And stocks and sectors where earnings visibility is visible, and also, going to look good, those are the sectors which will do well. And I think if you actually see what are those sectors, I think very clearly large financials, we see, earnings growth trajectory continuing. Even this time, I think large banks have given great results in the current environment. We have seen, non-fund-based financials like asset management companies, wealth management companies, other capital market associated companies declare good results, and it's very clear that all of them have done well. I think pharma has seen great results, and we expect that they also should see decent results going forward. And last but not the least, we are already starting to see some uptick as far as the infra-related and the capex-related sectors are concerned. And there is absolutely, again, no doubt that there is potential there. So I think these are the sectors which will show good profit, and there should be a good potential. I think one sector which we have not seen growth over the last 6 months has been the consumer, particularly the consumer discretionary. But we do expect that the next 6 months with, huge wedding season and festive season and a lot of uptick as far as even the broad level spending is concerned based on good monsoons and so on and so forth, that also should start to pick up. So there are opportunities for sure. The only thing is return expectations have to mellow down, and that has been repeated many times by multiple guests in your show.
The buzz line or the punchline, I think, this Diwali is that don't really, there is a lot of josh in the market, but after the recent bout of the correction, that josh is not over. But it's important to get the hosh back also. So josh and hosh, I think, are the two words which have to coexist, because in last 2 years, it was only about josh.
Yeah.
And now josh and hosh have to come back, which is that everything will not make money. And just because everything has not made money in last 1 month, that does not mean nobody will make money going in future also. So Josh and Hosh, क्या बोलते हैं Nilesh bhai? Happy Diwali first.
Happy Diwali Nikunj too, and all of y'all and all the viewers. Yeah, absolutely. I mean,
Josh and Hosh, right?
Josh and Hosh both go together. Even for Josh, you need to have Hosh. So, yeah, they both go together. I mean, undoubtedly.
But it is a little damaging, right? And must be puncturing that euphoria that we were in just about a month back, because individual portfolios and individual stocks have seen quite a bit of damage. I mean, 30–40% odd.
Yeah, but it was well overdue, I guess.
Yeah, but at the indices level, the damage is not so much. Even across, I mean...
No, I'm talking about portfolios.
Yeah, I mean, individual positions, yes. But otherwise, I think, I still think it's well contained. And I think every quarter, every 4–5 months, we see a situation where markets do correct, or there is a correction of 5 to 10%, which is relatively short-lived, and it bounces back. Why? Because the earnings growth is still quite very strong. I mean, leave aside the top 20, 30, 40 names, which I would probably call them as the Goliaths.
Yeah.
Leave aside the Goliaths, but down below, the Davids are still performing very, very strongly. I mean, and there are pockets where there has been still 30 to 50% earnings growth. It's not just the 5, 10, 15%, but 30 to 50% profit growth or earnings growth. And when you have still that kind of scenario, I still think it's perfectly fine.
Sunil, would you concur with what Nilesh is saying, that forget the Goliaths, but look at what's really happening in the Davids, the bottom rung of the market? I mean, we all know small and mid caps. If you picked your stocks right, you're all smiles this Diwali as well. Would you be hunting there specifically?
No, I think as investors, we are already always hunting for good opportunities, whether it's small, mid, or large. It's not that easy because we are in a period where stocks generally are not cheap. But Aisha, all we have to do is pick up good 5–6 stocks in a year. And I think if you're patient, if you be grounded, and if you don't get carried away in the momentum, I think it's easier said than done, but I think you are set. The only thing I have repeated many times in various forums is that in 2020, we used to look at stocks which could double in 2 years. In 21, we were looking at stocks which could double in maybe 3 years. Last year, we were looking at stocks which could double in 4 years. I think now we are very happy even if we are able to invest in stocks which can double in 5 years. And I think to that extent, if your I would say return expectation is realistic, then you will not end up chasing stocks just because you want to make some extraordinary returns in a not so cheap market. So I think to that extent, yes, there are opportunities across, and I would say that if your return expectations are maybe 13, 14, 15, 16%, then even in some of the larger companies, there are potential good buys.
They talk about Diwali being a time when you're sort of decluttering everything. So if one had to actually use that analogy in the markets and declutter, where is it that you believe that maybe valuations have run up too much, or maybe the party is over and one needs to declutter or get out of some of those sectors and walk into the new Samvat afresh? Which would those sectors be?
This is for me?
Yes, that's right, Sunil, for you.
So I mentioned, I think there were a lot of these theme-based sectors like railways, defense, maybe to that extent EMS, recently, renewable energy. I think these are all great sectors. But ultimately, you want to buy good companies at good valuations. You buy good companies at some crazy valuation, you're not going to make money. And I think there has been a decent correction in a lot of these sectors, 30, 40%. I think one has to be very careful that just because a company is presenting itself as one of these sunrise sectors, you don't go and just latch onto it. So, I would say that things to avoid are more stock specific because even within a sector, there can be opportunities on the positive side, but some of these sort of, the theme-based sectors are something where we are very, very off at the current valuations. Maybe, if you get an opportunity and the price is correct, we would be more than happy to look at it. But at these valuations, we would avoid these sectors.
2022. You told our viewers to buy liquor stocks. 2023, you told them to buy snacks. So Diwali in Chakna, right? 2020 and 2023. What is the new thing for 2024?
So I think clearly the BPC category, the beauty personal care category, I think it looks incredible.
That new word I've heard, huh?
And
what?
BPC category.
No, of course.
Yes.
Beauty and personal care,
yeah.
And so if you really look at that segment.
His target audience. Of course, BPC.
Sunil is still old school, huh? He's talking infrastructure. Nilesh has moved on in life.
And I think there are two very big drivers. I mean, the fact that you're going to still have more and more women coming in and kind of earning more. And take decisions. And number two is, I think the second is basically the kind of
I think will increase. Decision making was always there with women.
Yeah, but I think the earnings and I think the second is essentially the kind of populism or doles which are being given out, the kind of programs which are there where you get 1,500 or 2,000 rupees a month. Clearly, I think that's going to be a lot of money. I mean, if you just look at India, 140 crore people, half of that women, 70 crore. Out of that, if you slice out 20, 30 crore of that, and if each one of them is going to receive about, say, 1,000, 1,500 rupees a month, that's 20, 30,000 crores a month coming in as purchasing power. Where's that money going to go for? I mean, yes, there's going to be roti, kapda, makan. Maybe there's also going to be education, health. But after that, what next? It has to be the BPC, and I clearly see that markets like China have witnessed that when you go from $3,000 to $10,000 per capita, you're clearly seeing huge amount of spend go up on the BPC side. And if you get the template right, if you have the playbook right out there, I think you could have a potential wealth creator. I mean, we saw these in the 90s where a lot of FMCG companies rode on the basic staples, what we talk as the soaps and the shampoos. It's now, I think that's now a mature category. You now got to move on to the BPC side. And that's where I clearly think there's a very big, powerful mega theme which is likely to emerge in the next 5, 10, 15 years.
I think also a big factor which would lead to that is also a lot more women are going to get out of their homes and start working, and
yes.
That's where they'll spend.
Absolutely. Yeah. And that powered by digitization. I mean, earlier you needed a physical distribution network. You needed to...
just 2 clicks and you
Two
have
clicks and you're there. So social media, influencers,
but not
all
too
of that.
Crowded, you're not worried about
It is
that?
crowded.
Yeah.
It is crowded, but Jo Jeeta Wohi Sikandar. I mean, you've got to spot the Sikandar there and ride it.
But this space, in a sense, has been traditionally dominated by the big boys.
Yes.
Which is that you got HUL, you got ITC,
yes.
Tatas have tried to get the foot into the door. The new incumbents, Reliance, Nykaa, the new incumbents, can they make a mark?
So there are two plays here. One is the platform. So I think Nykaa, Reliance are more of platforms. They're going to sell everything and everything, even in the BPC category. And then there are the product companies. Within the product companies, I think they will have their own growth story. And it's important to figure out who's going to scale up and who's going to keep growing sustainability. I think that's where basically I think the opportunity is. The conventional, the Goliaths are going to struggle. They will probably grow at 2, 3, 4%. That's about it. I think versus that, if you can spot the companies which are going to grow at 20% types for the next 5, 7 years, I think there's a phenomenal opportunity because the underlying business is a very capital efficient business. Margins are high, spending on advertising is discretionary, and I think the day you kind of scale up, you don't need to spend as much on advertising and on the digital promotions. After that, you will see margin expansion, cash flows emerge, And that's really where the opportunity lies.
Sunil, you in a sense have championed identifying the Davids, which are the great companies in the small and the mid cap space. Where are you picking your spots in the small and the mid cap space? I mean, the hallmark of the one of the big hallmarks of the asset management business you run is centered around the fact that you want to identify good mid cap companies with high growth potential, which have potential to outperform.
So Nikunj, I think if you're not able to create alpha, then we don't need to exist, because if you're not able to give returns higher than the Nifty or the benchmark, then investors are better off investing in the index funds or ETFs and pay low fees. So therefore, stock picking obviously is a need as well as passion for us. Having said that, as I said earlier, we were looking earlier at stocks doubling in 2-3 years. I think now we are looking at stocks doubling maybe in 5 years, if you're lucky in 4 years. And to that extent, the return differential, of mid caps over large cap and small caps over large caps will narrow down quite significantly. And if, the return differential narrows down quite substantially, then frankly, your I would say inclination towards taking higher risk to generate slightly more returns to that extent should be lower. So having said that, there are opportunities. I still believe that asset and wealth management has a huge opportunity. There are select discretionary consumption plays, and which would cover the BPC, which is a new term even I learned today. Because, last 18 months, India has not seen, any kind of significant growth in any kind of consumption. But hopefully, the early indications are that we have already started to see a pickup in October. And there's no reason to believe that consumption will not pick up in a young country like India and a growing in terms of wealth country like India. So discretionary consumption and also the fact that earlier, as you mentioned, the Goliaths used to corner all the consumption sort of market share. But now the young guys are willing to experiment with social media, Instagram and so many other things. The new brands are also getting an opportunity to showcase their products. So there will be a lot of opportunities even in that space. The other thing, Nikunj, is, the world is transforming. Nothing is now going to last for like 20, 30, 40 years. We are in shorter cycles and a very transformative world. So maybe, AI will throw up some new names. We have already seen how the digital world opened up and gave opportunity to invest in so many new names over the last 3, 4, 5 years. Renewable energy can open up a great sort of opportunity over the next 4, 5 years. So there are multiple themes which will come up. And, we are lucky that in India, we have so many listed companies and so many entrepreneurs. So kuch na kuch to milte rahega.
And Sunil, before we wrap, there are a lot of mega trends which everybody is talking about. EV, solar, energy transition. One common theme which we've got this time, Sunil, is that energy transition is the real deal. Now you can buy EVs and feel happy. You can bet on solar and get excited. You can bet on via companies like you did, and you created wealth for your investors. Where is this entire energy transmission theme headed, and where are you betting on?
Nikunj, the conclusion of all this is that oil prices globally look to be coming down. Despite multiple wars happening, even in Middle East, oil is hovering around $70. And with this whole transition towards renewable, battery storage, which is BAS, and hydrogen, and so many other, nuclear is coming back. I think it is very clear that the demand for fossil fuel will not be great, and in fact it might start to peter off, and which would mean that oil structurally seems to be on a downward slope. And I think nothing can be better for India, and I would say that would be the mega theme for India as an economy, because if the economy grows from 4 trillion to 8 trillion with a much lesser reliance on imported oil, I think we are set. Because even now the biggest component of our imports is oil or crude, and I would say that you should play companies which would benefit out of lower energy cost, and you should actually play the country which would benefit out of lower energy cost, and that clearly is India.
Sunil, so good having you on the show with us today, and once again wish you and your entire team at Abakkus a very happy and prosperous Diwali from all of us.
Thank you and wish you the same, Aisha.
If you like this video, then like, share and subscribe to ET Now.